Got some M&A news this morning. Warren Buffett's Berkshire Hathaway agreeing to acquire Alleghany for more than $848 a share, $11.6 billion in cash, already adding to its large insurance holdings, including Geico and General Re. Meantime, software maker Anaplan surging in the pre-market after agreeing to be taken private by Thoma Bravo in a $10.7 billion deal. This is Buffett's biggest deal since Precision Castparts.
Well, it does matter because what's happened is that we've been very concerned about this new FTC, new antitrust department of the part of justice. And we think, well, you know what, maybe M&A's over. But this kind of under-the-radar screen deal, I think, passes. And by the way, Anaplan's very interesting because that's a big money loser. Frank Calderoni, fantastic guy. Company has lost money, but does have a product people like in enterprise. And Anaplan is the outlier. But those are the companies that have been sold off dramatically. Thoma Bravo sees value, makes me start thinking, okay, all the ones that people have given up on, let's take another closer look that maybe they've got something. Frank's program, by the way, at Anaplan is one that many people use. I know I suggested to a company that they ought to look at it, and they were like, no, that's too expensive. And then they proceeded to do it themselves and had no idea what they were doing.
What about this discussion this morning that Buffett's sort of going back to his roots? And does that, I don't know, in people's perception at least, close doors to maybe going after deals that would be outside of his comfort zone?
Great question. Look, I think the insurance business is a terrific business if you know how to do it. And there are plenty of insurers. There hasn't been a deal in a long time in insurance. But look, is he going to be able to buy another company that's a railroad? No, they're going to block that. Anything railroad, they'll block. Pipeline, maybe. Pipelines are cheap still. That could be a place where he doubles down on. That wouldn't surprise me at all. But those are the ones that I think you can buy as insurance and pipeline.
Some also say that this deal, because it's run by a man who ran General Re in the early 2000s, maybe the succession thing has a new wrinkle?
That would be quite a move. I know that I always thought General Re was poorly run until Buffett bought it. Letter Y. I mean, I first saw it, I said, geez, maybe they're buying Alleghany to go with Precision Castparts because Alleghany has titanium. But then Allegany's titanium, that's the that's the ATI kind. Yeah. They have a bad problem with Russia and titanium. Russia's got all
the other issue, and I'm sure you guys talked about Berkshire hitting all-time highs last week.
Yes.
Typically not something you see when the macro's about to collapse.
Very true. The railroads have been incredibly strong. The pipelines have come back rather dramatically. The portfolio itself has had a bunch of, American Express is doing well, Coca-Cola is doing well. But then let's talk about the non-elephant in the room, which is Apple. And Apple had Shenzhen come back online. The stock fell 10 on Shenzhen. It's going to go up. There's a lot. Tony Saganegi, good to see him back on. He was talking very positively about the amount of money they can bring in from, let's just say, ancillary products. MoffettNathanson had a big piece today about how the shift of advertising is going Apple's way. I think Apple remains a great own. Don't sell.
Yeah.
No changes for me on that.